This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of February 23rd through the 27th. This is the last big full week for fourth quarter earnings reports. We're going to get the preview on them, though, from Charles Roplat, our senior market analyst, who always takes a look ahead each week. And so we have 463 companies confirmed reporting, 49 members of the S&P 500 index. Given all of the uncertainty with corporate earnings, should investors be considering some type of hedging strategy for their portfolios just to have in reserve?
Well, I think the strategy investors should have been following all along during this recession is really dollar cost averaging, going more defensive, and if they're scared, buying less stocks. Now, I know there's probably people watching this who haven't done any of it, or are still sitting on the same stocks they held, say, in June or July, or even prior to that. And I think in this market, it's really a good time, if you haven't yet, sit back, step back, look at your portfolio, and make a decision. Would I buy this stock right now or not? And the answer is you wouldn't buy it right now. Get out of it and buy something else. Even with your 401k, everybody always has options. I do think people should maintain some exposure to the markets. You never know when the rebound's going to occur. Long-term stocks are still the best way to build wealth. But certainly we're in an environment right now where it makes sense to be defensive and really even consider buying a smaller allocation of stocks than you normally would. Say if you might invest $5,000 into a set of stocks. If you see something you like, maybe you put $1,000 in it, maybe you put $2,000 in it. So you keep some cash on the side. So if the market does go lower or the volatility kind of keeps you up at night, you're not as exposed as you might normally be.
You think the market is oversold? The indexes, the major indexes are oversold. You make that remark in this preview here, the text version. What does that mean exactly?
What it really means is support levels, and you can usually draw it as to where has an index or a stock, where has it fallen to previously. And what technicians do, they look at the chart and they really kind of look for a little down dip where it seems like the stock or the market has fallen to a certain level and then kind of raised higher. That's known as support levels. Typically when we see stocks fall below those levels or hit those levels, we typically see a bounce. We didn't see that this morning, Friday morning on the S&P or the Dow. I kind of thought we would, which kind of concerned me a little bit. But the other thing we look at indicators called stochastics, wild RSI, and they generally go in a range between 0 and 100. And what you usually see with those indicators, particularly stochastics, if it goes below about, say, 25, it usually means there's too much selling pressure and the market's overdue for a rebound. And we're seeing that right now in the Dow. We're seeing that right now in the S&P 500. People should understand that technical analysis only works till it doesn't. It's very dependent on sentiment. So it's very possible for a stock or an index to be either oversold or overbought for a period of time, but the technicals right now are saying we should see a bounce within the next few days. Knock on wood.
Sage words spoken. It only works till it doesn't. That's what I say.
That sounds like a politician.
I expected something a little more profound from you. The gap between top-down and bottom-up estimates for '09 earnings seems to have narrowed a little bit. So does that put those estimates in a more attainable range?
Honestly, I think when people look at fiscal 2009 estimates, the key point they need to remember is that right now I would have better success picking the 4 teams that are going to be in this year's NCAA Final Four than what S&P 500 earnings are going to be. We continue to see estimates being cut. We've seen them slashed dramatically, and quite honestly, nobody knows what the S&P earnings or S&P 500 earnings are going to be like this year. Nobody knows what most companies are going to earn this year. So I think when you look at valuation multiples, and right now the S&P 500 is trading at about 12 times 2009 earnings, people really need to understand those earnings are very much subject to revision and very likely will be revised. We just don't know what earnings are going to be like at the end of this year.
And there's a lot of economic news on the docket this week, huh?
There is. There's a lot of housing data coming out. That has some impact on the markets. We'll have preliminary GDP coming out on Friday. That's a revision. I do expect GDP to be revised downwards, probably growth of negative 5% or worse. We also have Ben Bernanke testifying in front of Congress on Tuesday and Wednesday, formerly known as the Humphrey Hawkins testimony. Now it has a more bland name, something about semi-annual monetary policy. But he will be speaking on Tuesday. People will be able to access the speech on federalreserve.gov, the Fed's website. And certainly his comments will have some impact. I don't expect any surprises. Rather than not expecting any positive surprises, I actually expect some doom and gloom. But the question is, will the market look at it and say, we already know this, or will the market look at this and go, oh my gosh, we need to run for the hills again? I'm kind of thinking the latter, and perhaps we might get a little bit of a bounce next week, but fingers crossed on that.
Speaking of surprises, in his text version of the earnings preview for this week, Charles outlines 2 stocks that could surprise to the upside and 2 which could surprise to the downside. In order to access that information, you need to get over to Zacks.com if you're seeing this video from outside of there, and click on the earnings preview headline right next to his smiling picture and read all about it in his latest text version. With Charles Rotblatt, I'm Terry Ruffalo.